Gold has seen some gains after dropping in 10 of the past 12 sessions. Our next guest says gold still stands out as a highly liquid, time-tested diversifier when markets are volatile. So joining me now is Joy Yang, head of product management at MarketVector Indexes. It's great to have you join us. Thanks so much.
Thanks for having me.
So gold typically thought of as kind of like a safe haven. Why have we been seeing it sell off so much over the last couple of days and weeks?
I think it's important, number one, for investors to remember that just because something is a safe haven or a defensive asset does not mean it's not volatile. So I think, what we're seeing now with gold falling and really high volatility seems counterintuitive, especially when we expect gold to be rising with wars. But I think we're not seeing a case of investors trying to, play out the bull and bear case for gold. We're really seeing the investors trying to play out the short versus long-term case around what's happening in the markets now. And I think right now, this war has come with the supply shock and rising prices as well as a liquidity squeeze. So investors are trying to take cash out where they can. And with gold, rising over 2025, hitting all-time highs in 2025, gold is an easy liquid place for investors to take out cash and pay for bills and pay for military expenditures that they need.
Is it possible too? I mean, we saw gold hit like record highs at the beginning of this year. Is this kind of a correction that was needed anyways for the metal?
So I think anytime you see some of these parabolic rises in price, you're going to attract speculators and essentially FOMO players. And these type of players, what do they want to do? They want to take the money and run. So when gold peaked, this was a natural place also for people who want to take profit out of the system, deleverage, and really cash out. So this is, everybody was waiting for this moment, but at the same time, the long-term case for gold still stands.
And when it comes to gold, what's the investment takeaway?
I think you have to think whether you're in gold now or just thinking about should you start allocating to gold. You have to think about the long-term strategic plays that are driving gold and will still hold gold up. And those are essentially, there's still increasingly geopolitical instability, a weakening dollar, and resilient inflation. So those dynamics have not changed, and they will continue to support gold. So I think in those cases, investors who can stay for the long run and who think of gold as a diversifying asset, there's still a strong case for gold.
Other than gold, where are you seeing opportunities in the market right now?
So of course, with gold, gold miners are an interesting play on gold. They're a leveraged play on gold, and they are exposed to equity characteristics. But also, thinking about gold and its role as a diversifier in portfolio, we look at the other alternative assets, whether they're business development companies, private equity, and private debt, which have been beaten down, but not all of these cases should be beaten down. So I think investors that want to seek an alternative play on diversifying their portfolio should look at diversified ways of looking at business development companies. Also, along with gold, we have digital gold, which is Bitcoin. Again, gold has the advantage of having thousands of years of attracting a strong investor base, whereas Bitcoin is still evolving and trying to balance speculative players with institutional players. But it serves very similar dynamics and characteristics to, the qualities that people want in gold.
And Bitcoin is something you're going to be watching for this weekend. Why is that?
I think because Bitcoin prices out of market hours in real time, and we're seeing it, pricing the real time market sentiment. And we look at where Bitcoin had been, and we're looking at we're monitoring our crypto heat index, which looks at not just Bitcoin, but the rest of the crypto industry. And we're seeing breadth and depth in all of the tokens kind of coming out of this fear territory and now, monitoring and digesting news over the weekend and outside of market hours.
Going back to finding other opportunities in the market, what are your thoughts on emerging markets? Is that a good opportunity for investors?
I think emerging markets are an interesting place also for investors to look at because they've been undervalued for so long. And it's interesting to see how resilient they have been through previous global economic shocks, through this tariff uncertainty. That they've been quite resilient in being able to pivot and shift opportunities and away from kind of what we thought was, really or like a downside case for emerging markets, and we can't think of all emerging markets as a homogeneous pool. So obviously markets that are more commodity sensitive and importing commodities will be hurt a little bit more, but we've seen them being able to pivot. So those are Asian emerging markets versus Latin American emerging markets, which have a strong case given that they are commodity exporters.
So, sorry, just correct me if I'm wrong. Are you saying maybe stay away from Asian emerging markets right now, or those are the ones?
I think they're a good place to look at the opportunities if they can pivot out of, some of the rising costs around oil and food as well as manufacturing, because this, but if they can pivot very quickly, whether it's realigning themselves with China and other players, this is still an interesting place to look at.
Just lastly, looking at the markets as a whole, I wonder what your take is on the direction of the markets right now. We've seen the NASDAQ hit correction territory on Thursday, U.S. markets in particular lower than they have been in some time. Do you think this was a correction that's needed?
I think people are reacting to news at the moment, and sometimes there can be a market overreaction to headlines. So for investors, looking at the equity markets historically has always, gone past some of these geopolitical shocks. So we have to look for the long-term case, whether it's for technology or other parts of the market. But I think it's for investors trying to time some of these headlines is not going to be a strategy that bears out well. So I think it's still prudent for investors to think about staying invested, but being in a diversified portfolio strategy.
Okay, we will leave it there. Joy Yang, Head of Product Management at MarketVector Indexes. Appreciate your time. Thanks so much for joining us.